All right, welcome to the New Equity Network show. I'm Michael Yorba, your host. I've got my co-host here, Ed Baxter, 20-some-odd years in the industry. This is our first show on the air here, and we're going to break out into a lot of new topics here. We're going to talk about capital formation, market trends, and sector analysis. And we're going to be bringing CEOs of a variety of companies, whether they're private or public, but mostly young entrepreneurs looking to grow their company and meet investors or other seasoned market leaders. But we're going to start off with on our Mondays with a guy by the name of Michael Turner. He's a president and founder of Turner Capital Investments. He's going to give us a little lay of the land of where the market could go sector by sector as we get into the week. And then we're going to roll into, I'll be bringing Ed Baxter onto the show in the next half an hour so that we can talk about the different varieties of depth that we're going to bring on the show and break new ground. But first, without further ado, let's bring on Michael Turner. Michael, welcome to the show.
Hi, Michael. Good to be here. Thank you.
I'm glad you're here. All right, Michael, I wanted you to come onto the show because you, in the previous shows we've had, you've done exceptionally well with your trading prowess, your market technology that you bring to the table, and you got a massive, just a great track record. So thanks for showing up. Give the audience a little flavor for your background so they get a feel for who you are, and then let's get into some of the things we're going to talk about today.
Sure. My background really started out in engineering, and it rapidly moved into my major in college. Went to Oklahoma State was engineering, and then I minored in computer science. And spent about 15 to 16 years building enterprise level software systems for the pharmaceutical research world. And then in the late 90s, I got into investing in the stock market. I had really had a love for the stock market all along from the time I got out of college, because I really felt like it was a perfect environment to apply my computer science skills and building algorithms to analyze various aspects of the market. And in the late 90s, I really got an opportunity to build some systems that I could use actually initially just to manage my own money in the stock market. That grew into really a couple of different companies, but that I use to help folks make good decisions about what to get into and out of. But basically, what it amounts to, Michael, is that I have developed a quant-based or computer-based set of algorithms to analyze the market in general and stocks and ETFs in particular. And the thing that I have discovered is really some common sense things about the stock market. You know, a lot of people want to know what the stock market's going to do in a month or a year or 3 or 4 years, or whether they should be getting ready for a bear market or a bull market or what. And they focus too much, in my opinion, on what's going to happen. And that makes some sense, because people say, well, I want to buy a stock that's going to move up. Maybe it's going to move up 10%, 20%, or double over time. And that's not going to happen if I don't have some idea of where it's going. Well, there's some truth in that. The problem is that nobody really knows what's going to happen to a stock or the stock market in the future. But what we do know is what the market is doing right now and what a stock is doing right now. And I have found in the algorithms that we have run literally hundreds of thousands of both real world and fictitious world types of trading scenarios. And I'm very confident about what I'm going to share with the audience today is the fact that the market only exists in one of three conditions. Now, some of the things I'm going to say to you, Michael, really are just common sense things, but I'm going to pull it all back together and how you put it to work in making really good trades that have the odds of really in your favor of building your portfolio and growing it and being successful. But the market only exists in one of three conditions. It's either in a bull trend, a neutral trend, or a bear trend. And it never exists in any but one at a time. That's one. The second is that a bull market never goes from a bull market to a bear market in one step. Never. It never goes from a bear market to a bull market in one step. Never. Never has. What it does is it moves, the market always moves from, say, if it's in an uptrend as it is now, it'll move into a neutral condition. And from a neutral condition, it will either come out of that neutral condition and move back up into a bull cycle, or it'll move lower into a bear cycle. And we have developed systems to detect when that's going to occur, and we basically set up our trading accordingly. Not get into more detail if you want, but that's basically the concept.
Good. Now we've got a good scale of the landscape, how you come up with your decisions. And what I want to do with you on the show is get an overall view of the general market, but then drill down into the market sectors as you see them coming into either bull, neutral, or bear trends. So if I may, let's start off, because we've got a half an hour to talk with you about market sectors and what you see happening. Give us an idea of where you think in the general trend, S&P, NASDAQ, so on, where you think we are, bull, neutral, or bear, and when you start seeing signals of potential turns.
Well, it's kind of interesting because what I do is I have an algorithm where I chart what I call the market bias. And right now, the market bias is bullish, and it is right at 2.6% above what I call my neutral zone. Now, that's pretty close. Normally, in a bear trending market, it will run 4 or 5% above the neutral zone, and within the last a couple, 3 months, it has gotten right down to at the neutral zone. In fact, back in February, for just a little bit, it dipped down into the neutral zone and came right back up again. So right now, we are about 2.6% above the neutral zone. Now, what does that mean? That means that I want to be fully in the market. I want to be buying fundamentally strong stocks that have an upward technical trend. And I have a computer program, of course, that goes out and analyzes the various market segments and individual stocks to tell me what they are. Now, within that range of overall market bias, I'm looking at the S&P 500, the S&P 400, which are the mid-cap stocks, the NASDAQ, the Dow, and the Russell. All five of them are in bullish modes. They're technically moving higher. The sectors, on the other hand, most of them are. 7 out of the 10 sectors right now, this week, and I'm a long-term investor 1 week at a time. So here we are at the beginning of the week. This is how I'm looking at the week ahead. Right now, the only weak sectors that I see out there are telecom, energy, and utilities. All the rest of them, basic materials, financials, industrials, technologies, consumer staples, healthcare, and consumer discretionary, those are all in a bull trending mode. So at this moment, and this is what I'm doing with my clients, this is what I'm recommending to people who subscribe to my newsletter, is that we want to be fully in the market. You want to be 100% invested in the market, and but you only want to be in fundamentally strong, uptrending stocks. Now, having said that, you need the audience really needs to keep the following in mind, because this is very, very important. The average time between bear market segments or cycles, and a bear market is the market where the market goes down at least 20%. The average amount of time between the beginning between those bear markets is only 4.5 years, and we're almost 6.5 years since the last bear market. That's number one. Number two, the longest period of time between any bear market cycle has been 8 years. We're 6.5 years in. So the odds are extremely high that sometime within the next year, year and a half, and it could start next week, but sometime within the next year, year and a half, the odds are high that we're going to have a bear market cycle. And when that occurs, what will happen is that the market will move from a bullish cycle into the neutral zone. When it moves into the neutral zone, this is what I do with my clients. This is what I recommend. You get out of your fundamentally strong uptrending stocks as quickly as you can. It's not a panic situation. You take profits where you got them. You look at putting tight trailing stops on.
Michael. We're going to have to take a break now. Let's get into the minutia on the other side of this break about where you see strength and forward-leading indicators. All right?
Sounds good.
All right, we'll be right back on the other side of this break with Michael Turner, President and Founder, Turner Capital Investments, broadcasting to you live on AM 1160 KVCE, DFW's Business Authority.